Welcome. We are Advantage Liquidity Partners Limited. We are certified machinery and equipment appraisers. We put together this short video for you, people who may want to use an appraisal report for your own business. And we're going to answer some of the most common questions that we get. What is the process of doing a certified machinery and equipment appraisal? Who requests these appraisals? Why ask for an independent appraisal? And what is the value of a certified appraisal? And do we go and visit the equipment? So to begin with, we're members of the NEBB Appraisal Institute, which is an institute for appraisers of machinery and equipment. And we've gone through a training process and hold the CMEA designation that stands for Certified Machinery and Equipment Appraiser. By being part of the institute, we are bound by a strict code of ethics, and we've got a copy of that on our website. And we serve the Maritimes and Eastern Canada from our office in Moncton, New Brunswick. And we travel all over the region and go and visit pieces of equipment and businesses all the time for people in this region. So first of all, who requests appraisals? So you may find yourself on this list. So we do this for bankers, we do it for leasing companies, licensed insolvency trustees, lawyers, accountants, and people who may be buying or selling a business. These are what we call the users of the report. And the users are very important in our process of actually doing the report, but figuring out what kind of report we need to deliver. And I'll get into that as we elaborate here today. So what is the process of doing machinery and equipment appraisal? So the very first thing is that the need has to be identified by a user. So, for example, if you are a banker and you're thinking about making a loan to someone and you want to use the machinery and equipment as collateral for that loan, then your use is in figuring out what that stuff may be worth. Now, if you're using the Canada Small Business Finance Act, for example, the act will allow you to use a value that is close to a fair market value, and which is very different than if you are not using a government guarantee program. So, for example, for larger transactions, which may be beyond the scope of that loan program, bankers will often ask us for two different definitions of value: an orderly liquidation value and a forced liquidation value, because their interest is in knowing what they might actually be able to liquidate the equipment for, a real, true sort of collateral value of the business versus what they need to maybe be compliant with a government program. Here's the most important thing, though, is that it's the user of the report who is our client that we have a responsibility to. And I'm going to get into that in just a moment. But the user, you or the customer, the person who perhaps is trying to borrow money to buy a business, they will come and engage us. They'll come and say, hey, I've been told I need to get an appraisal. Can you tell me what it's going to cost? And can you execute this for me? And after talking with them and giving them an estimate of what the cost will be, then we're going to give that quote and we're going to base it upon a list of items that the customer or the requester has given us. Usually they have that available. If not, we can go and actually do data collection. We've done that several times. We then contact the user of the report, who is our client, to determine the proper definition of value that you're going to want for the report. There are 11 different definitions of value. So depending on the use case of who you are as an entity that requests this report, we're going to help you pick out which definition or definitions, plural, are going to be most appropriate. We then do the work of doing the research and analysis, and we deliver the report to the client only. So sometimes people who request these appraisal reports, they think that, I'm the one hiring you, I'm the one paying the bill, I get a copy, right? And the answer is no. Our client is the user, who may be, for example, a bank. So we're going to send that report directly to the bank and to the bank only. And then we will ask if the customer wants to get a copy, we'll ask you if it's okay to give a copy to the customer, but the report belongs to the user. It was written for the user's purpose, and for their purpose only. Now, why ask for an independent appraisal from a certified appraiser? Well, the very first reason is we have no interest in the outcome of any contemplated transaction, which puts us into a very different position from, for example, an equipment dealer. I'll get to that more in the next slide. Our only interest is in our continued demonstration of our objective credibility and independence. So we want to make sure that whatever value we put on a report is defensible. We are ready to prove the defensibility of that value. And our interest is in having a reputation of delivering objective third party reports that are not influenced by any party to the transaction. And we require that we get paid in advance. So, for example, if a borrower is buying a business, for example, which is our most often sort of use case, we'll give them an estimate of what the appraisal will cost. We then require payment in full before we go and do the work of the appraisal. And so, under this way, we are never under any kind of pressure or duress or under any influence from the person who hired us to deliver a predetermined value to the bank. We're completely independent. We've been paid in advance. And so there's no remaining influence that that person can have on the outcome of the report. So I mentioned dealers before. So, if someone goes to an equipment dealer and says, I want you to evaluate the equipment that I have, can you please write up an estimate of what it's worth? This is called a dealer opinion of value. Now, dealers are active in a given market for a different given type of equipment. And so their opinion of what something is worth is going to be based upon what they see happening in the market. So they maybe are seeing some people bring stuff in for trade-in, maybe they're selling equipment used, etc. Typically, what will be given is a list of equipment with a value. The dealer typically has a financial interest, however, in future dealings with either the buyer or the seller. And this can create a conflict of interest because that dealer wants the parties that they're dealing with to be pleased with the outcome of any sort of interaction with that dealer because they may want to sell more trucks to them, for example, in the future. And dealers are also business people. They're well aware of their trade and the equipment that they're dealing in, but they have no specific appraisal training or affiliations. For example, I've never seen a dealer opinion of value where it's outlined what the definition of value was that the prices were linked to. So, as you might imagine, a value of a piece of equipment in the fair market value scenario is very different from an orderly liquidation value or a forced liquidation value. And so this is why it's important that someone actually has training in the uses and the different methodologies of valuation that might be applicable in any given situation. USPAP stands for Uniform Standard of Professional Appraisal Practice, and it's a standard that evolved out of the Texas savings and loan crisis of the 1980s. And so this has evolved over the world in various areas. So if you've ever looked at a real estate appraisal, you'll find that it's prepared to see USPAP standards. And that's what the commercial real or the real estate appraisers in Canada have developed based on USPAP so that everyone is following the same set of rules with respect to what these reports look like. So under USPAP, each capital item is researched and a market or depreciation methodology is applied. The value is defensible in court and backed by data that we maintain in our files. Our only interest is the appraisal document itself and our reputation as appraisers, and we're held to task by the Institute and our own code of ethics. So our interest is just in the report and making sure that people see us as people who are giving an objective, unbiased opinion of what something is really worth based on the definition of value that is required for the given scenario. So let me give you an example of where this would come into play and why it's so important. So let's assume that a business is being sold for $100,000. And what the buyer and seller of the business believe is that within that $100,000 value, based on the performance of the business, that there's inventory of $25,000 and equipment of $25,000. But that's all there is for tangible value in the business. The difference between the market value of a business and the value of its tangible assets is, by accounting definition, the goodwill. So in this case, the buyer is going to pay $50,000 for the history of the business, the customer list, the awareness in the marketplace of the business, et cetera. And the two of them agree that this makes sense. The buyer and seller may also be aware that it's almost impossible to use goodwill as collateral for a loan. So what the two of them may decide to do is they may decide to represent their deal a little bit differently. They might agree that they're going to mark down that the inventory is worth 25,000, but they might say that the equipment is worth 60 and the goodwill is only 15, and they might decide to do this so that the buyer can get a larger loan from the bank in order to do this transaction. And so, what kind of position would this put the lender in? Well, if the bank were to make a $50,000 loan in this instance against the purported $60,000 value of the equipment, and then something went wrong and they had to seize the collateral, if they could sell the collateral at fair market value, then they would only realize $25,000. So this would be an example of a loan that would be under collateralized. And so a loan guarantee partner such as Industry Canada under the Canada Small Business Finance Loan Act may require a certified appraisal to avoid exactly this kind of scenario. So what is the value of a certified appraisal? It's basically, it manages liability for all parties. Lenders may be required to get this for the Industry Canada program. Accountants that are helping their clients change to international accounting standards may need an appraisal in order to put equity that may have disappeared through depreciation back onto the balance sheet. There can be tax reasons. You may want to transfer equipment between different entities or different people. And in order to make sure that the transaction stands up to scrutiny in the future, then with Revenue Canada, then you may want to have that appraisal report on hand. There are legal purposes for having a certified machinery and equipment appraisal, determining value for disputes, divorce, lawsuits, etc. The appraiser needs to conform to strict institute guidelines. And again, as I said before, equipment dealers may have conflicts of interest, which could influence the outcome of any kind of report or document they might put together that talks about the value of equipment. Do we go and visit the equipment? Well, the answer to this is not always. If we don't go and visit the equipment, we call this a desktop appraisal. And the fact that we did not see the equipment in person will be noted in the report. The report is generally considered more authoritative if we do go and visit the equipment. And many users and lenders in particular require that we go out and see the equipment ourselves, take photos, note down the serial numbers, etc. There can also be a mixture. So in some cases, we have visited businesses that have multiple locations throughout the Maritimes, for example. We might go to St. John, Fredericton, Charlottetown, and Halifax to visit and see different pieces of equipment. But the company might have 2 or 3 items up in Labrador. So we might go and do a site visit for the maritime locations and then just do the Labrador equipment through desktop appraisal by looking at photos given to us by the company and taking the information they've provided. So this is usually discussed with the user in advance to see what is going to be required for you and your purposes, and what is going to make for a more robust report if different things should happen in the future. So if you're concerned that you may have a file re-examined in the future, or if there might be a legal challenge to something, or tax authorities might come and look at something, then you would probably want to go with the most defensible report possible. And with that, I want to thank you very much. If you head over to BusinessAndAssetValues.com, you can find even more information, including videos that cover and actually show you what a USPAP-compliant machinery and equipment appraisal looks like. You can find out information about our business appraisal services. We have other videos that answer other more common questions. And you can also find the definitions of value that I mentioned, the code of ethics, and of course, the Contact Us tab, where you can find our phone number and email addresses and reach out and talk with us. We'd be more than happy to talk about your project and how we might be able to help you or your clients in order to achieve their ends. And with that, I'll say thank you very much and talk to you soon.